Good morning, everyone. And as previously announced, our lesson for today is on the revised corporation code. And I want to emphasize as early as now that the lesson is focused on the changes and introductions brought by the revised corporation code. And I do understand that students and bar reviewees really have difficulty understanding commercial law subjects, and that includes the corporation law and negotiable instruments law. And I want to share that during my bar, actually, commercial law was my Waterloo, and I can fully remember that my grade was 64. But I was trying to be positive back then that I started teaching corporation law and negotiable instruments law as a way of redeeming myself. Um, okay, we go now to our lesson, and as a first, I want to give you the profile of this revised corporation code, and it's numbered as 11232. And I asked my students to memorize numbers just to separate it with the old corporation code, which is a Batas Pambansa, and the number is 68. And actually, the purpose of the revised corporation code is really to ease the doing of business in the Philippines. And actually, that's one of the, according to investors, it's one of the weaknesses of the financial and business systems or institutions in the Philippines, and that includes the legal systems. Now, this law was approved on February 20, 2019, and it was effective on the same month, February 23, 2019. And it expressly repelled the old corporation code, which was not even, the old corporation code, I mean, was not even changed or amended for 39 years since. So that means since 1980. So it's really it had to adopt with the changing and modernity of times. So here I have identified six changes and introductions that we will be focusing, and I want you to take note of this because in the order as presented in the slide you are seeing now, we will be tackling each. So in this first part of the lesson, we will be tackling the first two changes or introductions made by the revised corporation code. Now we begin with the first one, the one man or one person corporation, so or known as acronymed as OPC. And section 10 of the new or the revised corporation code says that in OPC it should be a natural person, a trust, or an estate that could qualify as an OPC. And there's also a requirement under section 116 that either below or at the end of its corporate name, the OPC must be indicated. So it's like an indication. So just like in LLP, like limited liability partnership, you can see that. And so this one, there's also a requirement that OPC must be indicated. And it doesn't mean that the law is allowing now OPC. Still, the number of incorporators has a ceiling, which is 15, not more than 15. And there is an exception also for OPC because Section 116 specifically provides that it does not apply to banks and quasi banks, pre need trusts, insurance, public and publicly listed companies, and non chartered GOCCs or government owned or controlled corporations. So this is something new. OPC actually has been practiced in other jurisdictions, and actually this is one of the key strengths of tax havens because they allow the registration of an OPC. And the advantage of an OPC is that even if the owner or the investor of the corporation is giving up his property, but only up to the extent of his investment, that should be held liable in case there's a problem with the corporation as to its operations. And so the personal property of the investor or incorporator is still safe. So that's really the purpose of your OPC. And if you have trust issues, actually, that would really work for that investor. So the second changes or like introductions would be the perpetual existence of a corporate term. Actually, in the old law, it specifically provides that the maximum term would be 50 years and subject to renewal for another 50 years. However, this was deleted by the revised corporation code, and specifically section 11, 13, 14, and 35 of the new law specifically provides that there is that perpetual existence of the corporation. However, the articles of incorporation, by the discretion of the incorporators, they can still limit the existence of the corporation, but the default would be perpetual existence. And the existing corporations now, they're considered to have automatic perpetual existence unless the stockholders will vote by a majority vote, elects to retain the specific corporate term. And the SEC or the Securities and Exchange Commission must be notified. So you have to take note of this, and I think it's a good one because there's no need for you to specify. And it's possible that if business is doing well, then you can just have perpetual existence or for a long period of time, and there's no need for an amendment at all. So I think so. Before we continue with the other four changes or introductions, we will have a break, and I hope you will stay tuned and you still watch our second part. Thank you very much, and see you later.